Hello, everybody. Welcome to the webinar. My name is Mark Shawson, the pattern trader. I'll be starting this in just a moment. In the meantime, please go ahead and put your name and where you're from in the chat box there, and I'll be starting this momentarily. Hello, everybody. Welcome to the webinar. My name is Mark Shawson, the pattern trader. I'll be starting this in just a moment. Please let me know if you can see my screen and hear me clearly. So most of you are saying yes, so thank you for confirming that. Again, I'm trying to get used to a new technology here and probably doing a bad job of it. So I'll get started in just a few minutes. I'll let everybody, get everybody a chance to get in here, and we'll see how we go. So yeah, you guys have, Steve says, 3 great days so far. Your timing has been great. Kirby says, awesome timing is spot on. So thanks a ton for that. I'm going to give this a couple of minutes and give everybody a chance to check in here. So welcome to the webinar. I'll be starting in a few minutes. Typically, going to give five minutes for everyone to check in. John says, really enjoyed your webinars. Thanks, John. So I know I haven't talked much about Forex. I'll talk about one Forex pair that I am seeing a setup for. Again, what I try and do is, focus on, a particular setup. I don't care where that setup is. It could be in corn, could be in gold, could be in stocks. This week I've spent a lot of time on stocks because I predicted to the day when the NASDAQ was going to crash, almost 2 weeks to the week. So tomorrow, Friday, was 2 weeks where I predicted on a master pattern trader session that the NASDAQ had topped. And I kind of, set an objective to make 7 figures from a down move. And I pretty much hit that today, just in stocks. And then I'm making over $500,000 in gold. So it's been a pretty good 2 weeks. And again, this is kind of an introduction to my methodology where, I'm not looking to make money, every day or every week or every month. I'm just looking for a couple of setups a year. Now, I know this is very different than what you guys are looking at, where you've been introduced to these turbocharged, in and out systems with some magic moving average crossover. You're trying to scalp 15 pips here and there. I'm trying to, take a cut out of huge moves in the market. And, I've done that. I've done extraordinarily well in the last 2 weeks. Usually, you can't get in the beginning, you can't get in at the end, but I think I took a slice out of a good chunk of these markets. So Mustafa says, super webinar, always a pleasure to watch. Thanks, Mustafa. You're always very complimentary. Some of you are asking about my mentorship. I will, tell you how to get involved at the end of this webinar. And also, I'd really appreciate, if you like these webinars. I try to put out some energy. I think I hit it out of the park this week. If you wouldn't mind just putting a comment, whatever, good, bad, or indifferent, we'll post it. I'm going to put that link in the chat box here. That's a link to our review website. If you, would really appreciate if, you liked it, to let other people know. So Kirby says it's exciting to watch those puts explode. So yeah, this morning, things were exploding up my bum, waiting for Powell to speak. When the markets do a short covering rally, short covering rallies are some of the most brutal rallies. And, that's when you kind of have to believe in the picture that you're trading. So I'll kind of get into that in a moment. All right, I'll give this another 30 seconds. And then I'll get started. We still have some people actively checking in, almost 200 attendees, which is great at the end of the week. We had, I don't know, 400, and then we've got 400 on these YouTube things. So, so as I said, so let me just, welcome to day 4 of my 4-day live trade execution training sessions. My name again is Mark Shawson, the pattern trader. If you've been with me all these sessions, then just forgive me, I'll digress. I'm just going to give you a brief introduction. I've been trading for over 4 decades. I trade only based on price execution. So I don't look at the news. I don't hang out in chat rooms. I don't watch CNBC. I don't even listen to Chairman Powell, who came out and spoke. I don't listen to anybody. To me, the only person I listen to is a guy named Mr. Market. So the market is, everything that I need to, make good risk-reward decisions. And, if you start following gurus and you start following all these kind of people, there's nobody's bigger, no government, nobody's bigger than the market. The market is a discounting effect. The market is ahead of events. The market is the news. So, 2 weeks ago, the NASDAQ started rolling. And yet when I, go on TV, I hear people saying, hey, the restaurants are full. We're going to have a 7% GDP growth in the US. We've got trillions of dollars on the sidelines. We've got more stimulus coming, and on and on and on. And, it's like, tell me something I don't know, because that's what the market is. The market isn't about what you know today. The market's about 2 weeks from now, 2 months from now, 9 months from now. And, these patterns start forming ahead of when the events or the news that's pushing these things, is readily apparent. So I only look at, price action. So just to give you a flavor of what I do, here on Monday, I thought, because of some patterns that, that the QQQs, the NASDAQ was going to crash. And I got in a little bit early. I was too enthusiastic. There was kind of a gap up on Monday. I thought, I was really smart kind of selling into that gap. I really didn't have a signal, and that's where I lost my discipline. And I started buying these puts early. I started buying these puts at about $1.50, the 3007 puts. And they went to about 40 cents. And you'll see that I got out of some of them at $7 and $8 today. Just a massive move. And then I bought the 308s, and I was early. You can see I was down $24,000. I was also short BYND, and I was long the SQQQs, which are an inverse indicator. And, you know, I got in a little early because I foresaw this move. And so that was what Tuesday looked like. I was in a deficit in my account, 24,000. By a Wednesday, I was up 142,000. So about $165,000 swing. So you can see yesterday, the SQQQs were a dollar higher. I started buying these UVXYs. You know, so you can see that these puts that went to 40 cents yesterday were trading at $2.66. And I went from a $25,000 deficit to a $60,000 profit just on those puts. And then today, not too bad. So you can see I already had 450 of these. I already took profit. So this actually doesn't reflect all of the profits I made. So, you know, probably made, you know, 400 grand since the beginning of the week, just on the NASDAQ itself, just in this account. And I have multiple other accounts. And what was I going to say? I lost my train of thought. Yeah. So you can see, and I got out of all of these. So when the market starts going in my favor, I start whittling out. I started with 450 of these. I started whittling it down. And then as it goes in my favor, if I still think it's going down, then I take my profits here and then just roll it forward. So instead of being in the 307 puts, I would, you know, rolled it into the 302 puts and then clambered out of all of that. And you can see I was also short 2000 BYND, you know, when it hit 131 today, and took my profits on that. So that's just in the stock market this week. And you guys have been a witness to it. So it's not like I'm pulling stuff out of my drawers where I'm telling you something that, you know, you've been a witness to everything I've been saying. I've also been short gold all this time. I've been short for gold since February 9th at 1841, and then February 22nd at 1795, and got over $100 of gold on each respective position. And I'm just holding it because I told you, I thought where it was going to go was 1650. So, you know, that's what I do. So this was 2 weeks ago at the beginning of the move where I saw what I call a key reversal at the top of a chart pattern. And, you know, based on that reversal, based on the pattern, I started piling into these, you know, puts. So with the over $400,000 I made, you know, in this account this week, I made over $300,000 last week in 2 days, buying these puts at $1. They expired at the end of last week. I bought 350 of them, spent $35,000, and by the end of the week, I got out anywhere between the high fives and $8, made 560% on that 35 grand in 2 days on the week before. So collectively, you know, my objective was to make $1 million on this down move in the NASDAQ, and I'm pretty much there. So we'll see how much has got left on the table. This is what my emails look like, where I send out the information out every day. Now, the whole intent and objective of the pattern trader is to educate you. It's not a signal service. It's not a managed account service where, you know, I take your money and I put in trades. If I did that, it would be of no value to you because, you know, you wouldn't know why I'm buying or selling gold. And, you know, if I get hit by a bust, then what good is that, even if you make a little bit of money? So this was, you know, a limit order back in January 10th in gold. You can see it was halfway through this ascending, broadening. Now we're almost to the bottom end of it. And I said that was my trajectory in that email in January 10th. We're talking 2 months ago. That was my potential target, where that red arrow is, which is around 1650 to 1680. And today we dropped to about 1690 or something. So, and I said my target objective is 1700. And today we took that out. So you can see that was pretty prescient 2 months ago, where I was already prognosticating where gold was going to go, you know, despite the fact that there was a lot of confusion in there. And I added to my trade, you know, an additional trade at 1797 on February 22nd. And you saw that's that's from the other day. So this is, you know, pound versus New Zealand dollar. I'm going to talk about the pound versus New Zealand dollar. There was a double bottom several weeks ago. I still see that bottom, and I still think that we are going to go higher out, levitate out of here. So based on, seeing, pound New Zealand bottom on a bunch of things, among these trades, I was making probably about 100 grand in pound New Zealand. Then I also do stocks, etc. So that's just giving you a flavor for what I do. So, in the last couple of days, I've been, actively selling the Nasdaq, and took some profits today. But I don't know where it's gonna end up. I still think it looks a lot lower, but I had just hellacious profits in options that were expiring tomorrow. So you can't be too cute when these things were trading on a shelf around 304 today. When I was saying to my friend, I'm just waiting for one more push. So, put like 15. So you can see that the QQQs, they right around here was trading around 304 when the NASDAQ was trading at 12.2. And I said, I just want one more push. And once I got here, then, once all my options went to enormous profits. I got out of some 800% higher than where I got in on multiple positions, made over $400,000 in just this week on those options. So, as I talked about at the beginning of the week, everything to me starts, with, some kind of gestalt. I don't just pick trades, on a whim, out of my butt or, what. It's probably worthwhile to stick up, the rules of the road that I posted yesterday, if I can find them. Sorry, give me a moment. I have so much distractions on my screen. Here it is. So, if you bought my book, which you could have paid anything you want, it basically lays the principles of what I do. So the first thing I try and do, it's like every day I open up, my charts, NASDAQ, Australian, and I look at something, this picture, whatever I'm looking at here is starting to tell me, something. You got a reversal here, you got a double top, you've got two inside bars, I can open it up and it either says something or it doesn't. And I just, kind of move on. And so I scroll through my charts and I'm looking for certain things. And, when I see certain things, they stand out. So I'm looking, is the market, going up or going down? Sometimes we can't really see, sometimes it's going sideways, and those are markets that I avoid. So, I want to find things that are moving, gold dropping 200 bucks in the last month, the stock market dropping out of the sky. I'm looking for moves. So if something's just going sideways, I know a lot of FX traders like that because, they can see a range and that's what makes them feel secure and trying to carve out 15 pips here and 40 pips there. I'm not looking to play a game of chicken with my broker where I'm trying to get out before he gets me. I'm trying to carve out 150 pip moves, 300 pip moves, 2,000 pip moves. And in the NASDAQ, the NASDAQ's fallen over 10% in the last week. And I've gotten every bit of that. So that's what I'm looking for in my trade. So, if the market is reversing, then it's usually preceded by a pattern. And we'll look at the pound New Zealand dollar. I think it's reversing and there's a pattern there. Yet last week, the NASDAQ was, I believe, was trading at the top of a pattern. I put my money where my mouth is and made a lot of dough. So once I've either identified the phase or the condition, is the market going up or down? Or is it reversing? Is there a discernible chart pattern? Then I wait for a bar or a set of bars where I can set up a high probability trade, where I know where to get in the momentum of the trade and how to establish my risk. And then I layer it all with an execution order. So all of these three steps are subjective. They're all kind of a figment of my own imagination. And if, I'm demented, then, I want the market to confirm me. So if I think I want to buy something, I'll put a buy stop above, the high of the bar that I'm looking at. If I want to sell something, I'll put a sell stop. And that's basically the rules of the road. And again, it's all in my book that you could have, paid, as little as you wanted for it. or as much as you want. So, you know, at the beginning of the week, I was pointing out this pattern where you had a pattern in the NASDAQ and you had a certain set of price action. In fact, you had multiple patterns that I pointed out on the QQQs. It was like 5 patterns all coming together. I mean, when I see that, it's like I almost start doubting myself because, you know, it's almost too good. And you think, well, if I'm seeing this, then, you know, everyone's seeing it, and then the market doesn't, and then you start, you know, but so where is this thing? So this is the NASDAQ. Sorry, I keep hitting this upper bar. Still getting used to this platform here. So this is the NASDAQ. So now whether you trade this or you don't, that's really not the point of, you know, these webinars. I found this chart on the pound versus Australian dollar several months ago, made a huge amount of dough on that. I've been trading gold within this same pattern, and then I saw the NASDAQ. And the pattern is this kind of esoteric, idiosyncratic thing. You won't find it everywhere. It's called an ascending broadening price pattern. And it's called an ascending broadening price pattern because basically it's ascending, and while it's ascending, it's broadening. It starts out life in the pattern narrow and then widens or broadens at the top. And then once it basically breaks this area, then that basically, you know, starts confirming that this thing is breaking, and this becomes a bearish price pattern. And then we can actually set a profit target. So I think that this thing is still going to drop here, which means that, you know, you should be selling rallies in this thing. So once you understand, you know, your, you know, which direction you need to be faced, and sometimes it's not, you know, like I said, I make most of my money on the turn when the market just goes from one direction to the other. And it looks like, wow, it just went to that place and then reversed. And, you know, you were lucky, you know, if you did that. Well, I kind of beg to differ. You know, the more I practice, the luckier I get. That's what Gary Player, the golfer, said. And, you know, you could see right here was the beginning of a head and shoulders. Looks like a man or woman's head and shoulders. And you also had the ascending broadening price pattern. So you had 2 patterns coming together. And if you look at the QQQs, there's actually, you know, 5. There's an island top here. There's all kinds of stuff. So once you feel like something is going to turn where, you know, now you're at the top of this pattern. And then you see this, what I call, this is a key reversal price action, where the market made an all-time new high for the NASDAQ. But on the day and the week that it did that, it closed on the low. The sellers were in control. So on the day that the NASDAQ made a very new high, it made a low. Now, you know, looking at one bar like that, not very conclusive, but I saw the same thing on the weekly bar where I saw the same reversal. And to me, a reversal is simply observing how prices close relative to the high and low. And when I say it's closing on the low, I mean like the lower quadrant, the lower 1/4 of the bar. I think you'll all agree, while it's not on the very low, it's on the low of the, you know, of that bar. And so this indicates to me that the sellers are in control. Now, you just can't just fire at every key reversal you see. You know, some are more meaningful than others. Some are fake outs. Here's a giant key reversal, and you can see that it just went on and made a new high. So this is what I distinguish, you know, at the pattern trader, what I teach you to differentiate, and why I thought this is so consequential, because this was happening right at the top of this huge pattern along this resistance line. And so, you know, I can start drawing these patterns in my sleep. And I think that's the value. If you don't mind a self-promotion, if you get my emails, is that over time, when you start seeing these patterns and trades, that, you know, if you start seeing this ascending broadening on pound Australian or corn or whatever you're trading, you'll know how to trade it. And, you know, this pattern repeats in, you know, in every different market, as I'll show you in just a moment. So then now, once I understand the pattern and the direction, so this, you know, started to indicate there was even a mini head and shoulders up here. And so once I think I know what's going on, then I wait for a day where I can, kind of probe the market. Sometimes you're just sticking a toe in the water to see how it feels. And it was right on this day, right here. It was a mini reversal, made a new high, closed on the low, and it was almost an inside bar too, where that range was almost inside. So I basically just put a sell stop under here. Instead of putting a sell stop, I started buying a bunch of puts there. And in 2 days, I made 300 grand on that move down. Then it moved back up and, started loading up again, and then had another how you doing right there. So there were a bunch of bars. Let me just take away some of this. So once you understand the pattern, you understand the direction. Now you want to get in sync with the direction. So here is either reversal or an inside bar. And what I mean by an inside bar is you can see that the range of that bar literally sits within the range of that bar. And I remember that up bar was Monday because I got in early and I got fried. And then Tuesday came, and then I knew, that was it. And I started adding to my positions here. I knew that this was ready to go. And so once we understand this, now we know where to be faced. So, Friday, you get, an inside bar or something like that. Doesn't matter where the inside bar, trades. And to me, these inside bars, what they mean is just a coil or a building of energy. So this is a hypothetical, obviously, but it wasn't here, where to me, it was just a building of energy. And then that energy just uncorks or releases in the direction as indicated by the pattern or the trend. And so, now it's, people say, well, should I get in now? Well, now it's a bit in the, it's in the middle of the tennis court. You've had, a huge, and I don't mean to make a metaphor that you guys don't understand. If you're on a tennis court, you either want to be on the baseline or you want to be at the net. You don't want to be in the middle because that's when the ball will land at your feet. So now, this trade has had a huge move. And now if you're not in, you want to wait to try and find something where you understand the risk and reward. Frankly, if this makes a little bit of a retreat back to this neckline, where we get kind of a little movement higher, I would be inclined to, sell into that. I call that a rubber band effect, where it goes higher to release lower. So you want to build energy. Right now, you're catching this thing right as the energy, has been dissipated. You kind of want this next release to get and go again. So, if you weren't there for the wedding, you don't want to be there for the funeral. But I think, again, this thing is still, coming down here. So, you're about halfway there. And frankly, once it gets there, I think, it will probably go there. So I think that this thing is, just getting going. And, I showed you the opposite of the QQQs, and that's the SQQQs. I sent out another email to our traders, our members, the elite members last night to add to their position. I think we got in a few days ago, 1385. Then I said, this is just about to release. I said, this is just getting started. I think I told you that last night so the SQQQs are an inverse ETF. An inverse meaning that, when the market was going up, the NASDAQ was going up, this of course was going down. And now if we think the NASDAQ is going to go down, this is going to go up. And to me, I'm looking at this pattern, this inverted, you kind of have this rounding bottom and then the shoulder, and you kind of broke out today. So this is the neckline, a line that is simply drawn through the entire pattern. So you can see that we closed above the neckline. Now, sometimes you get a, flurry out of here, then you get a retest, and then when it goes again, that's when it's good to go. So I do think that this is just the start of a downtrend in the NASDAQ. Um, I just wanted to show you guys some other things that I'm looking at that is going to give you an insight to, what's going on, because there's a lot of hype out there. Wow. See, this is telling you the whole story of why this market's going to go down. This is LQD. This is the investment grade bond index. So you can see I keep an eye on quite a few things. Let me just take out a. So this is the underbelly. When this starts to roll, then the market will rock and roll. Maybe I should even put a weekly up just to put this in perspective. So I showed this to you yesterday. And again, I look at everything through the prism of price. I don't care if there's, two insects climbing up a wall. If you can put a high and low to it, I would trade that. So this is, interest rates, which are an inverse, relationship. And this is the LQD ETF, which is really a proxy for, high yield debt. And you can see that we have almost like a triple top here. And this thing confirmed the breakdown right there. So this is where, it's lights out. Now, if we close here, this will be like an inside weak bar, where you can see that this bar is inside the range of last week. And to me, that's just a coil. And now by virtue of the pattern, we can anticipate that it's going to uncoil that way. And if it does, it's going to destabilize the entire market. Because you can see when that happened the last time, the markets, went down 40%. And so, if we get one of these, watch out. So, this is all, building a story where there's a lot of complacency. And I hear on the internet, on CNBC, I kind of listen to these guys and I laugh. The guys tell me the restaurants are full and we got 7% GDP growth. And that's why this thing is such a buy. I mean, that's for junior, kindergarten traders. I know that, but the market is about tomorrow and, 6 months of tomorrow. So this is the 20-year government treasury. Now, treasuries have an inverse relationship where when prices are going up, interest rates are going down. But when prices are going down, interest rates are going up. So since interest rates are heading down, prices heading down, interest rates are skyrocketing. Now, this is at the same time today that, Jerome Powell, our US Federal Reserve Chairman, is saying, nothing to worry about. I'm cool. Treasury's going to 1.6%. I don't believe it. There's no inflation. I'm just going to hang back. And, the market didn't like that. I'll just tell you that Ben Bernanke in 2007, when one of the major hedge funds went bankrupt, 2007 said, hey, there's no problem in the subprime market. A year later, the US economy almost went into, depression levels because of the subprime meltdown. So even the Fed chairmans are just academicians. And the fact that Powell's like dancing on the graves of investors here. I mean, he's just clueless. He's just saying, hey, this is cool. It'll turn around. Well, let's see. And the problem is that now we have 1.6% yield in the 10-year, and the average yield on the S&P is 1.5%. So why not sell your stocks and go get a risk-free rate of return in the market? And, that creates, selling. So we shall see. Look, I don't buy fundamentals. I don't buy stories. I trade price. And, it looks like the markets are going to keep coming off here. Now, the other market that I've been heavily invested in and involved in and consumed with is the gold market. And this is also, people are looking at gold through the prism of emotions. The Federal Reserve's, doing quantitative easing and, devaluing our money. And you hear all of those stories on the internet. But the real thing behind gold is that when, gold hates, higher interest rates. And you saw that TLT chart, that 20-year chart, when the prices are going down, means interest rates are going higher. So gold doesn't have a dividend. Gold yields you nothing. Gold is just a hope of something in the future. But, you can go and get something real in a 10-year treasury right now that pays you 1.6%. And so gold has been plummeting within the confines of also the same ascending broadening, where it starts out narrow and then widens at the top. Now, these structures, I put structures around them, and then I see how they respond, at key levels where, maybe we grab a foothold and maybe that's when it does get going. Or if it breaks here, it's going to come right back to the beginning, 1200. Hard as that is to, reconcile, that's what that looks like. And, that's why it's really hard to approach the markets from an intellectual basis. If I told you gold is going to $1,200, you'd think that I'm out of my mind. I would think that I'm out of my mind, but that's what this picture is telling me. And this is all that you have to trust is Mr. Market. Prices don't lie. Powell can have an opinion. Biden can have an opinion. The market is, the point of reckoning. And, you cannot fight the market. You cannot fight the tape. You may be able to intellectualize it and find every reason why this should be doing this. Instead, it's doing that. And, the market is bigger than anybody. So I've been saying all week since we started here. Well, actually, this is the beginning of the week right here. We started at $17.50 and now we're $50 lower. And by the end of next week, we'll probably be $50 lower than that. And then we'll see what happens right there. But it all starts with the same shape. It starts with a pattern. And then within the pattern, there are all kinds of price action. You had a double top here where you made two peaks right in the same area. Let me choose a different. And then not only do you have a double top, but you see the price action within the double top. And what I mean by price action is that when you made a new high here, you close on the low for the week. You made a new high, you close on the low. And these bars were pointing in the direction that the market was going to go. So once you understand the pattern, then you look for what I call my insurance day bars, key reversal or inside bars to get you in the momentum. So you can see here was an inside weak bar. The range from high to low of that bar was within the range of the high and low of the previous week. So we call that an inside bar. Simply, the high and low is inside the range of the previous week. You had one here and you had one here, and they were both selling opportunities to put you in the direction. All you have to do is put your sell stop there and let the market do all the work for you. So I've been short gold since late January. Here we are, early March, and I'll be in this trade as long as it'll have me. So people say, well, where do you put your take profit? So I'll let the market kind of tell me. So, if, into next week, we kind of go down here and then we start, doing that, that'll tell me maybe this is the time to, now I don't expect this will go up in one bar, but, if we did a reversal like that, I'd start taking notice and start peeling off some positions. So I let the market put me in. I let the market tell me when to get out. So I look for certain places on the chart, certain price action, and respond accordingly. So, always the discussion of the stop loss and the take profit is a difficult one because every trade setup is different. Also where you get in the trade. So I got in this trade at 1841 originally, all the way up here with this right under that inside bar. And then I added to my trade right there. Now they were pretty close. It was $40 apart, 1841 and 1797. So it really depends. Sometimes I'll add, lower down in the thing. And obviously, my objective on this one is shorter than the one on that one. So it depends where you are in the trade, where, what does the trade look like? What are your expectations? So it all starts with a vision for what that trade is. So once I started seeing, this up here, this kind of, symmetrical triangle in this breakout, I started thinking that this was going to come lower. And then I put my line here and I started thinking, okay, that's my target. So now this is my, a target, which was, $150 lower than where I got in. And let's see what it does here. I'll probably start, pulling out of, some trades, around the 1650, 1660. I'll start, taking, peeling off some of my positions, seeing what happens. And then I'll see how this, dances with the devil here and, come up with a, trading, scenario once I see how this thing responds. So I just want to go back to, this reference that I showed you. So you see this pattern now. We've looked at it on 3 different instruments: pound Australian, which is this chart, gold, XAU, USD, and the NASDAQ. Same kind of chart. And you see once this thing broke the top of this ascending broadening price pattern, when it did that right here, I said we're going to 175. And I didn't just pull that out of my, what. It's where the beginning of the pattern is. And now we pull back to 175 and it looks like we're going to go here. Because, I think that this thing has bottomed and you have a key reversal here. So I've talked a lot about gold and stocks. So let me talk about an FX pair that, I really like going into next week. So this is the British pound versus the New Zealand dollar. And I've been bullish on this pair since late 2016 in fits and starts, because this thing's been a tough cookie to get hold of. But, I've made just huge amounts of cuts in this thing, where I saw this double bottom here. I got out at 211.87 on Sunday night right there. Made thousands and thousands of pips on multiple trades being long this. Now, why would I be long this? I mean, this is one of these trades that looks pretty arbitrary. It's up, it's down, it's sideways. So how do you make sense of this? So once I see these sideways things, I try and dig in and find what I feel is what I call the governing price pattern. So all the way back here, you made a double bottom. Just what it sounds like. Market went to an all-time new low, bounced off the low, retested the low, and then you had this W. And then once it crossed the neckline, it confirmed that pattern. And even though that was 4 years ago, this double bottom is what I call the governing price pattern. Governing because it governs or dictates prices going forward. And by and large, if you bought the dips based on that, you were rewarded. Also, the price action. When this made an all-time new low, it closed 1,000 pips on the other thing. And it was on this bar, I was telling our members at the time, this thing is pointing where it wants to go. Now, obviously, it took years to get there. But the combination of a pattern and the price action tells me what's going on. So you can see every time this made a new low down here, it closed on the high. Made a new low, closed on the high. Made a new low, closed on the high. And from here, I took it from 175 to 189 and just made a huge rip in this thing. And I think we're at now the same precipice, where here is another looking double bottom. Kind of looks just like the double bottom I saw in Lyft at $46 a few weeks ago, the stock, where, it's a little bit disguised because on this one, we kind of closed on the low. But you can see that we closed in the same area, but it's this pattern that clues me to what's going on here. So I'm always on the lookout for a place to get in sync with what I think is a stealth bull market. And so now you have a set of, whoops, took the wrong color here. Now you have the double bottom a few weeks ago And now you have these key reversals. Made a new low, close on the high. Last week, made a new low, close on the high. And you can see this week, we're just starting to sneak out of here. And, you get above here, I think it's just going to be liftoff. So you guys wanted a trade, an FX trade. That's the trade. That's what the NASDAQ is to me, where the NASDAQ was 2 weeks ago, where I'm smelling a turn. Now I'm going to get, involved in the turn early. There's a lot of noise in this pair, but if you know what you're looking for. So this is the pound New Zealand dollar on a daily. The last chart was on a weekly, where you could see the reason why I used that weekly was for that long-term reference. That chart pattern 5 years ago is telling me what to do now. But notwithstanding, here is this double bottom in the midst of all of this. So, the way I look at this is that this is kind of a bear trap. You can see that the market went under this 190 price level that it was kind of sitting on. And, we just snuck out, and now we snuck back up in here. So to me, if you chase these lows, you're trapped. And this, to me represents a bear trap. But notwithstanding, to me, this is the double bottom. And I've been saying, I did one of these, 4-session things. I was saying at the time, this thing's bottom, but I said, it's not going to go straight up, because when something comes down that hard, it just doesn't go like that. I kind of, to me, the markets have this concept of spacing, where you have to build away from this, build some space so that you can kind of go back in the other direction. And I think that this has been a lot of noise, but, once we start getting above here, but buried within all this noise, you can see the key reversal here, the key reversal there. You have several inside bars, and I would simply put a buy stop above today's highs. 123, I don't know what that is, 50. I would put a buy stop there and let it sit there, and just let it hang there. Put a buy stop here, and if the market goes down, guess what? No harm, no foul. If one day, 2 a.m. in the morning while you're sleeping, it runs into you, you could wake up and have that. So I let the market do all the work for me. So that, is my, next favorite risk reward trade that I'm going to be looking at. So this is what I do. I look for high value risk reward things. Am I right all the time? No. But if I can, get in, here, and I think we're going to go make a new high again. So now I'll just see, what I do is I put an arbitrary take profit. I put my take profit there. And then if the market looks like it's kind of confirming what I'm looking like, I'm not going to, stop it from making me more money. I'll move my take profit here and then here. And, I could be in this thing for 6 months. I was once in this trade for 13 months. So this is what I look to do, folks. I don't look to mix it up. A lot of people, this is what they do. They look at these things and try and take 7 pips out of here and there. That to me is just a boxing match. It just, I would just lose my mind and my account, because you do, 500 trades in here and now you're down, and you're going to miss it when it does that. I just do one trade here and, leave all this alone. All right, now I'll take some questions. Eric says, is a 30, 40 pip stop loss good enough with the, I don't think so. This thing moves around. So what I would do is I would put a stop under today's low. So I'd put a buy stop here and a sell stop there. This is your risk and that's your reward. And I showed you on the profit calculator, even if this is 80 pips or 90 pips or whatever, that all you do is reduce your position size to whatever risk you want to take here. So if you want to take a 2% risk here with an 80 pip stop loss, then you put your position size calculator together and that'll tell you how big a position. But yeah, no, you can't put 20 pip stop losses in these markets. These things are buzzing around, 80, 100 pips every 2 seconds. How are you going to, time this thing? Look at this thing. Goes up and down. These are, whatever, 191 to 192.40. That's 140 pips up and down here. So you can't time it with a 20 pip stop loss. See, I mean, your risk should match your objective. So if I'm trying to make 800 pips out of this trade, which I think I can, then why do I need to put a 20 pip stop loss? So this is, I think, what a lot of the industry doesn't understand about what I'm doing, because they're so used to, making these small trades with, 15 or 20 pip stop losses because their position sizes are too big. So, this thing could come down, arbitrarily 70 pips here, and not even look at like it did anything. So let me just check out what the range is today. The range is 191.79 to 193.32. So what is that? 150 pips, something like that. So 179. So 150 pips. So, sorry, got the wrong. So I showed you this position size calculator. Sorry, my screen is frozen. So let's go to the pound versus the New Zealand dollar. Whoops, I had it. There it is. So this is a position size calculator, which is, exactly what, it says. So I'll actually put this link in the chat box so you don't have to scurry around for it. And this is what it means. It tells you how big a position to correctly size for your given account and risk. So you can use this in, any currency denominations, most major currencies around the world. And, let's just assume you have a $2,500 account and you want to buy the pound New Zealand with 150 pips. Now that's a huge stop loss. And you go, well, I can't take 150 pip stop loss. And yeah, if you took your typical trade size, you couldn't, because you'd lose 5-10% of your account. But if you put your risk 0.5%, I really like this trade. If it goes, I would, say you could do 1 to 1.5%, even if you lose your money. And then you hit calculate, and this tells you how big a position size. Actually, this is on, probably should do it in micro lots. So you can do 3.42 micro lots if you have the right broker, or 342 mini lots. Now this will tell you if you put on this position size with even 150 pips. So now you're giving yourself a wide swath. You're letting this thing go all over the place. You're letting a news release come out. You're giving it all that room. You're not worried about it. Because if you lose, all you're going to do is lose 37 bucks of your 2,500, and you'll live to fight another day. So this is how you make money in the market. And you don't have to have a big account. Everyone says, well, you're showing me your huge account and this and that. I started with nothing. So this is how you correctly, professionally size your account like a pro. And this is how you can get involved in the pound New Zealand and look for an 800 pip profit with a 150 pip stop loss. And I don't think it'll come down there, but look at all this stuff, how it's just been ranging here, and you would have been, duked out of this thing, 100 times. And so this is what I would do. I would just put a buy stop there, a sell stop there, a stop loss. This is your risk. And let's say this is the first level of reward. That's 900 pips away. And believe me, I'll be adding to this along the way. So, as this thing goes up, does a little, hook down, gives me a little key reversal. Then I'm putting another buy here and getting in sync with it as it goes up. So this is how I add to my positions and make massive amounts of dough, looking at, a pattern that tells me where this thing's going to go. So, I don't have any special insight into the Bank of New Zealand or the Bank of, England, but I can pretty well tell where this is going to go. And, if it goes there, I'll make 900 pips. Hamish says, is the NASDAQ still going lower? It's likely to, Hamish. Ari says, I saw a broadening ascending pattern on Bitcoin. Bitcoin, I don't know how. It's just a parabolic market. You can't see anything in there. It's just been a straight up. Philippe says, great webinar. Thank you. Farron says, BYND. I actually got out of my BYND today. I've been short for so long, and I just kind of covered. I still have a small position. So BYND, I've been sitting in this thing for a long time, and it kind of gave me this is not a full key reversal higher, but you could see it closed a little closer to the high than the low, made a new low, kind of closed up here. I just danced out of it. I shorted 147 and went to 218 on me, and I got out at like 134. So I made 13 bucks and risked. So not a great trade, but I made a bunch of money. I've made a bunch of money buying puts here. Made like 50 grand in 3 days just buying puts here. So I'll look to wrangle this another day, but I kind of took profits. We're in this funky support zone, and I got out. Probably a mistake. I waited this long, and we'll see what happens there. So Ference, I'm out of my position there. I had so much on today, I just cleaned it out. I made 400 grand and said, thank you very much, and I'll look to reload, at some other point. James says, where can you trade fractional shares? Robinhood. I think you can trade fractional shares. I think most brokers you can now too. I trade in larger shares, obviously, but I think Robinhood. But all the brokers, Charles Schwab, TD Ameritrade, they all should, I would imagine. But I know Robinhood certainly does. What is the take profit target for SQQ and UVXY? So UVXY is the volatility indicator on the S&P. And again, this is an inverse thing. And it looks like it's just starting, which means that the selling doesn't feel like it's even started yet, which again has made me wonder if this is. So you can see this thing is mainly going down. It's a counter indicator. So when the market's going higher, this thing's going down. But, I started buying it 2 days ago when I was telling you guys there was this small little island here. And to me, it was just a great risk reward trade. Even if it didn't work out, I could get a peek at a trade. I made this too big, for a very small risk. And now I got no risk at all. So, whether this levitates out of here or not, I don't know. We'll see, very quickly, probably by tomorrow. You kind of see this one low here and this other low. But I was looking at these two inside bars. And, sometimes, these markets, they end or, with just a very narrow range. They look very innocuous. They look like nothing. But, that could be the beginning of something. And so you broke out above that. And now you kind of have this funky looking double bottom here. And this would be the price I would look for. If it crosses there, basically confirms, and this is a volatility. So just a fancy word, when the stock market goes down, this starts going higher. And I just thought it was just a ridiculously, if I could buy the high here, which I did at 870 and put my low right here at 840, I had a 30-cent risk for an $8 upside. So, I'll do that every day of the week and Sunday, even if I lose. So, these things are just percolating, and it looks like these markets are just getting started. So the S&P and the NASDAQ was the first to get hit because it's front loaded with all the technology stocks. And when interest rates going up, those are the first ones that are going to get, slaughtered, which they did. Next behind that's the S&P, and then the Dow. So you can see that this is the daily S&P, and whereas the NASDAQ punctured this ascending broadening, this is just hit it today. Just hit it today. We're just at the lower end today. So I think we got a lot lower to go. We hit it here, and I think that we're at least coming here. So whatever that is, another 300. But if we get going, I can imagine we'll hit there. So this is what UVXY is saying, that once this starts picking up, if it does, once it starts going down, UVXY will start going up. And then the Dow, which is the strongest and will be the last to get whacked, but nonetheless, I think it will get whacked. You can see that the NASDAQ has pierced the underbelly of this ascending broadening. The S&P is just traded down to it, but you can see that the Dow is just in the middle of it. It's still got the lower end, which is about 30,000 even. And then, certainly points to 29, which would, mean a 10% drop from the top. And I think that's minimum. But I don't know. I just feel like these things, have got more than that to go if they start getting going. So you can see that at the top here, we have this mini head and shoulders. So you can see we cut below the neckline today of this mini head and shoulders and this ascending broadening. So I think, that's 900, points away. Garrett wants to know the target for the SQQQs. They're all pretty arbitrary. I wouldn't say they're arbitrary. There are certain targets that I would look for. So let me just, so this is revalued because, when the market goes down, you can see it just got revalued there because at some point it would go to zero. The more the market goes up, the more this thing, so they revalued it. And so I would look for some move back up into this, $18 area. So you can see this inverted head and shoulders right here that is forming and broken out of today. So I always like to take a measure, somewhat arbitrary, from the top, which is about 15 to the bottom, which is 12. So that's about $3. And this is the neckline. So I would put at least a $3 move on top of this, at least. And if we got going, we could come up into here. I think we're going to go between 18 and 25, if not higher. So yeah, I think this is just getting started. So Matt, I just did give you my view on the S&P and the Dow and the NASDAQ. Are there any other questions you guys have? So, that's my FX pair for the week is the pound New Zealand. I know I didn't spend a lot of time on FX this week. I look at all the markets. I've been trading the long side of the euro yen. I'm long the euro yen. It's been in this profound uptrend. You can see that it's got a weekly inside bar here, and it's going to be interesting to see how this follows through into next week. All these yen pairs are strong. You can see that the pound yen is trading right at this resistance and looking like it's going to go a lot higher. So I like these pound yen. You can see the huge double bottom, inverted head and shoulders on this thing. And it's basically trading right above this resistance. So I think that we're looking like a moonshot in pound yen. So I hope you guys have had an enjoyable week. I just wanted to give you an insight to the price structure, how I approach trades purely from price. And you guys have had a front row seat where, I got whacked on Monday buying the QQQ puts, on anticipation of a decline. The triple Qs were 324 when we spoke, and now they're 303. And I said the whole week that it was going to crash. And, I didn't just pull that out of my, my pocket. It was all based on evaluation of price structure. So, hopefully you got value. Majid said, I really enjoy the way you trade and the way you teach. Thank you. Sammy says, so if you would like to know how to, get my trades, then, just hang back. I'm going to play you a video. Let me see if I can find it. This radically simple yet effective system of delivering scientifically tested trading results will work for you even if you are completely new to trading, or you have years of experience as a struggling trader, or you don't have a computer. A phone is all that is needed these days. Before I show you what these emails look like, I first need to tell you what this service is not. This service is not a get-rich-quick scheme. Real results take time. You're not going to become a millionaire overnight. To get scientific studies, you need to execute this strategy with scientific consistency. If you're not fully committed, then this won't work for you. If you're going to jump from the next shiny object as soon as a marketing guy sends you an email or posts something on Facebook, then this system is also not going to be for you. This is for men and women who are ready to stop looking for miracles, like Mike, who had this to say on Facebook. I don't know if Mark Shawza realizes the huge impact he is having on some of our lives. I've gone from working 12-hour days in oil to sitting in front of my PC at home for a couple of hours a day, placing trades and learning from his journals. I'm now planning to go traveling too and can trade from my laptop along the way. This has been a truly life-changing experience. Or like Andy, who wrote me an email saying, hi, Mark, just a quick thank you. Last week, I lost 51% of my trades, but still returned a profit of 1,265 and 26 British pounds. And that was multiplied by 2, as I have 3 accounts, one for myself, one for my son, and another for my wife. So I grossed over 3,800 pounds in 1 week over 3 accounts using the methods you are teaching. Keep up the good work. Best regards, Andy. Andy actually attached a screenshot of the first account he mentioned in his email. I literally have hundreds upon hundreds of emails, comments, and reviews just like this about my daily email service. So let me break down exactly how it works. Every day, email from me with instructions on what to do. The email looks like this. You get an image of the chart with the analysis drawn on it, so you know exactly why I'm entering the trade. Each of the patterns I draw on this chart will have been scientifically tested. You get the exact entry and exit points so that you can enter the trade without guesswork and do it quickly. You also get a brief analytical breakdown. These small, digestible chunks of information help you retain the reason why I enter trades, and it teaches you while you make money. I call this daily email service the Pattern Trader Elite, and you've no doubt noticed that the Pattern Trader Elite is, without question, the most efficient service there is. And that gives you the freedom to experience a scientifically tested trading strategy without needing to spend months or years learning it for yourself. And as any Pattern Trader Elite member will tell you, the results are off the charts, pun intended. In fact, a woman called Marta sent me the following email. She said, "Dear Mark, I'm doing really well. Yes, the last 2 weeks I've made $15,000 on your recent trades in gold, Australian dollar versus US dollar versus Japanese yen, pound versus Japanese yen, and I do like the Dow Jones Industrials. Thank you, you're a gem, Marta." Now, before I reveal exactly how to sign up to become a Pattern Trader Elite member, I'd like to throw in a few bonuses. The first free gift you'll be receiving is the Pattern Trader Advisory. Every single week, I'll send you a 15 to 30-minute video analysis of the markets. This will give you hands-on training so that you can really accelerate your learning even faster. One of my members, Chris, wrote to me recently telling me how much he's enjoyed the education part of this service. Hi, Mark. I doubt you will read this, but in case you do, I just wanted to say thank you. I have focused my time on learning the principles of your trading strategy, as I feel the education is of most importance to me. I've made 3 trades this week. One, your recommendation on XAU USD, which is spot gold, and the other 2 on my own in oil and the dollar versus the Japanese yen. Oil has dropped out of the sky, nearly 500 pips in 1 week, and the dollar yen just started with momentum on the downside. I'm on holiday with the family, which has added to a very enjoyable week. Kind regards, Chris. On our website right now, the Pattern Trader Advisory is $200 per year, and it'll be thrown in with the entire bundle of packages for free. The next bonus I'm going to give you is called the Master Pattern Trader. You'll get a live 1 to 2 hour session with me every single Friday. That's over 45 live sessions within the next 12 months in a group environment. Here, you get to watch how I go through the markets. Then you can ask questions and discover exactly what I believe is going to happen next. On the website right now, the Master Pattern Trader is $997, which I consider to be underpriced since it comes out to be less than $3 per day. However, here's the bad news. This service is very exclusive. It is not for everyone, which is why I don't just have a buy now button below this video. In order to get into this program, you have to do something a little bit unconventional. I'm running a little experiment where I'm offering people a huge discount. If you'd like to be part of the Pattern Trader Elite service, send an email over to markshawsonelite@gmail.com with the subject line, "Let's do this." I'll send you a detailed summary of exactly what this program is all about, and you just tell me if I should save you a spot or not. I don't want to make this publicly available. First, make sure you copy the address below and email me at markshawsonelite@gmail.com. And then in the subject line, just put, "Let's do this." When you do that, you've taken the first step to joining hundreds of other highly successful traders. We've had many interviews with people who transformed themselves from ordinary people to elite traders. Here's just a small snippet of what they had to say.
Damn it, I'm gonna learn this and I'm gonna figure it out. I finally got angry and said, you know what? I'm gonna figure it out.
You know, for me, it comes down to trust. I really trust what he does, and I follow him, and what he's saying is, you know, accurate. I'm really big on details, and he has the details in there.
And I must say that every winning trade, it just confirmed my belief in his method. That the way he reasons the trade, you know, is actually correct.
Mark is a genuine, sincere, caring individual who cares about his members. He is as smart as any Forex trader that I have ever met.
And that has actually helped me being more secure and more calm about trading and about my. I've heard that before also from others, and I will just repeat this. Or repeat that. And it is. He makes me calm, and I actually do training. I'm not so scared anymore. You know?
And I do think that y'all's program is definitely the key to that end result.
You follow Mark for a little bit of time, you listen, you see he's truly genuine and he's the real deal. He's not full of it. He's not just, oh, I'm boasting. Hey, look what I made this time around. You know? No. It's A, B, and C is going to get you to D, E, and F.
So let's talk results then. So where are you at right now? So where's you're in the black? How much has your account grown over the last, let's say, year?
So I think based on the screenshot I gave you, it was like about 70 grand CHF. It's still hovering around that level. Essentially what I've done is I've been through the principal investment that I put in. So basically all that money that is in the account right now is actually profit salary.
I think I picked up probably 852 pips on it. You know, but you don't have a large trading account. You're trading standard lots. You know, they're worth $10. Pip is worth $10. So 852 pips in one trade is quite a financial gain.
That's what he actually brings, I think, to many the calmness. You know, don't worry. You know, believe what you're doing and just and analyze it. You know, in the way I do, and see if it works. And we must say, you know, his results, you know, are also showing that it works. So that's fine. I think that's great, and I'm looking forward to even working more. You know,
I just follow what Mark has laid out, you know, exactly for a while and make sure to see how it works, because it does work. That's the way to go.
There's a better way, an easier way, and I think that's what resonates mostly with me. A much better way, much less stress, and the proof is in the pudding with Mark.
You know, if there's anyone out there who's lost some money, is down and stuck, and he needs something, the lifeline to turn his life around, anyone can do that. Anyone. So it represents a lifeline, hope for anyone who's willing to learn and apply his methods.
I like the recommendations. I like having a safety net. I like having someone to listen to, because you know there's always something smart. Not the sharpest knife in the drawer, but when I follow somebody who I consider to be extremely knowledgeable and extremely trustworthy, I'm going to stick with them, and that's what I found in Mark.
And I do think that y'all's program is definitely the key to that end result.
If you're ready to join, then send an email over to mark.elite@gmail.com with the subject line, "Let's do this." I hope you've enjoyed watching this presentation half as much as I enjoyed making it. I'll see you on the other side. Okay, guys, like I said, I hope you enjoyed those few days together. I know I did. As you can see, I don't really need to do this business. I make plenty of money on my own trading. But I really enjoy it. I enjoy giving back. That's why I started the Pattern Trader. I had no clue when I started it, what to expect, but to give is better than to receive. And believe it or not, I get more gratification by helping somebody than seeing dollars go up and down in my account. I've been watching that for 40 years now. So Craig says, thank you. When can we expect to hear from the elite team? So we'll get back to you. Somebody will get back to you, Craig, in ready order. We're spread all over the world. So give it a few days or 24 hours. We're pretty responsive, but somebody should follow up with you. All right, guys. Well, thanks a ton. If you sign up with the Pattern Trader, I'll see you soon. If you wouldn't mind, here's another link to put, whatever you got out of this thing. There's a review thing there, good, bad, or indifferent. Appreciate, putting something in the tip jar. Thanks again. Have a great weekend. For those of my master pattern trader, I will see you tomorrow, 11 a.m. Eastern Standard Time. No worries, David. Nice to talk to you too. So John says, the fact you donate your book sales. So not only do I donate, I take the double the book sales and then make a personal donation. So yeah, that's my way of giving back. You guys are all welcome. I'll see you hopefully all very soon.